Hello, hi. Welcome to the classroom. Please like, share, and definitely don't forget to subscribe to our channel.
In the previous video, we spoke about investments, the difference between cash, profit, and the different asset classes. In this video, we are going to wrap things up and discuss the importance of a feasibility study and insurance.
A feasibility study analyzes a company's ability to complete a project. Feasibility studies play an important role in business development. They provide crucial information to management to prevent a company from entering blindly into risky projects. Once the company's questions are satisfied, it sets a timeline to initiate the project. A feasibility study can determine the resources a company needs to complete a project. It can also prevent a company from investing time and money into an ill-fated project. To provide reliable information, a feasibility study needs to use recent data and be completed within a reasonable amount of time, since they can be expensive to conduct.
After having done a feasibility study, it is good to consider doing a break-even analysis, because this will help you decide or understand when you would have sold enough units to cover all of the costs which you incurred in production. We do not know what tomorrow may hold. We do not have a crystal ball or a device which could tell us about the future. This is why we have concepts such as insurance and assurance. Beyond these two concepts, there is compulsory insurance and non-compulsory insurance. In South Africa, compulsory insurance will include the following: the Unemployment Insurance Fund. The money for this is taken from the salaries of every single employee, and it is paid to SARS and then administered by the Department of Labor. The employee may claim from this fund if they are retrenched, fired, or have their contracts terminated. The Unemployment Insurance Fund Act will stipulate the major ins and outs of how this fund must work. The Compensation for Occupational Injuries and Diseases Act. This insurance must be taken out by employers for their employees. It is to protect them from death or injury whilst on duty. The fees may vary from occupation to occupation, and some people, like the police, the army, domestic workers, and casual workers, are exempted from receiving the benefits of this fund. The Road Accident Fund. If you have watched the TV show I Blew It, you may have seen the extravagant stories of people who have received the benefits of this fund. In order to claim from the Road Accident Fund, you must have been involved in a road accident. It covers the financial losses suffered due to the injury in the accident, and the contributions of this fund come from the levies paid from the sale of fuel in South Africa. Non-compulsory insurance. This insurance type will cover your losses in terms of risks which may emanate from business stoppage. Business interruption insurance. If a business experiences any loss or damage that results in a reduction in turnover, the business interruption insurance will cover this loss. Depending on how comprehensive the policy is, it may even cover the business if there is an incident preventing customers accessing the premises of the business. Some policies have been known to have an add-on which will even cover the business against loss in revenue if a supplier cannot supply the business due to damage to their property. The best example of this insurance is when travel and tourism businesses tried to claim against Sanlam and other insurers. for the impact which COVID had had on their livelihoods. There was a big yay and nay, which was ultimately resolved in favor of the businesses. Fidelity Insurance will cover businesses against the loss of money from theft. Think of that company that transports money from one place to another. Public Liability Insurance. Public liability insurance will cover the business if the owner or an employee causes damage to a visitor or customer's property, or if someone is injured or dies during the course of business. The policy will stipulate the maximum loss that will be covered if a third party claims from the business. The greater the loss covered, the bigger the risk for the insurance company. Accordingly, the higher the monthly premiums will be. Insurance on vehicles. It is important that the business takes out insurance on its vehicles. The vehicle insurance can either be fully comprehensive or it may only cover third-party, fire, and theft. In the latter case, the business's vehicle will not be repaired if it is damaged in an accident, but only the other party's vehicle will be covered. Most vehicle insurance policies have the option to get a rental vehicle while the damaged vehicle is in for repairs. There is usually a small additional monthly charge for this.
Thank you for joining us for this lesson. If you learned something, please give this video a like, share, and subscribe.